year is it, Lauren?
It is almost Christmas time, almost time for Santa to come.
Wow. And what else happens around Christmas time for workplaces?
A lot of workplaces, they celebrate it. They have a Christmas party. And I guess something that we kind of need to talk about is whether it's tax deductible or not.
Because everyone just assumes that the Christmas party is tax deductible, and that is actually probably more likely not the case.
Mm-hmm.
So I think you're going to do a bit of a Q&A with me, aren't you, Lauren?
Yeah. So I've had a look at some of the rulings around this, and Jo, I think that I just have a few questions for you to try and clarify it, because this is not straightforward stuff. But I know that the questions that I'm going to ask you will make it a lot clearer about what is tax deductible, what's not tax deductible. So the first thing that I want to ask you is about what is considered a gift or non-entertainment, and what is considered entertainment. How are those two things separated?
Okay, so let's just start with why we're worried about it first. So entertainment is falls under fringe benefits tax. So if we're providing entertainment to our staff, so fringe benefits tax is only applicable to employees, so it's only applicable to stuff that you provide to your staff. So there's implication, and entertainment is also not tax deductible in most circumstances. So we do need to have a think about what is entertainment and what's non-entertainment. So entertainment means it's something that has an experience related to it. So whether that be food, drink, it might be going somewhere to experience something. It might be like you're playing 10-pin bowling, or you're jumping out of an aeroplane, something like that. And it also includes the travel and accommodation around doing those experiences. So that's what we consider to be entertainment. And non-entertainment is something that's probably a little bit more tangible, so a gift, So if we give you a bottle of perfume or some champagne, or something that's actually probably a bit more physical to touch, then that would be considered to be non-entertainment.
Okay, so then what are the entertainment rules for employees in terms of, fringe benefits tax, and what do we need to look out for?
Okay, so fringe benefits tax means that if you provide someone who is an employee with a benefit that's not a direct cash benefit, the tax office want to tax you on it, because the way they look at it is they're saying, right, well, you're getting a benefit for something that's not a wage, and if it was a wage, you would be taxed on it. So they want to apply tax to it. So if we didn't have fringe benefits tax, we'd all be packaging up our salaries and saying, well, can you pay my home mortgage? Can you pay my school fees? Can you pay my gym fees? Can you pay all these different things for me, buy me a car? And at the end of the day, I've got $20,000 left and I'll pay tax on that. So the tax office obviously don't want you to do that. So all those other benefits now get taxed, and they get taxed from a fringe benefits tax point of view at the highest tax rate, which is 47%. Now, that means there's a pretty big disincentive to be packaging up your salary there are some ways you can package it up. Of course, it can be effective, but in most cases, we're not going to do that. So we're going to get paid our wage. So when it comes to things like entertainment, because they fall under fringe benefits tax, if you're providing entertainment to your staff, it is actually a fringe benefit. But there is a thing called a minor fringe benefit, which means it's under $300. So in most cases, when people have a Christmas party, the amount of money they spend on their staff is probably going to be less than $300. It also includes their associate. So if you bring, your staff member's partner, that's also considered to be a fringe benefit, or their children, so someone who's directly related to them, that would also be considered to be a fringe benefit. And in each circumstance, you've got a $300 limit. So what that means is if you do pay less than $300, then it is still considered a fringe benefit, but it's a minor one and you don't have to pay tax on it. But what that also means is that you can't claim the GST on that, and you also can't claim a tax deduction on that entertainment, or basically on that entertainment. Now, if it is over $300, then we do have to pay fringe benefits tax on it. And in that circumstance, you can claim the tax deduction and you can claim the GST as well.
So is that $300 per employee, Jo?
Okay, yeah, it is per employee, but it's not actually per employee, it's per incident or per thing, event. So you could have a Christmas party where like we took you and your husband, Adam, who's not your husband yet, but will be soon. And I might spend $200 on each of you. That would still be considered to be under, even though it's $400 in total, it would still be considered to be under the $300 because they're two separate things. I paid one thing for you and one thing for Adam. So it wouldn't be for the entire Christmas party. It has to be $300. It's for how many people are there, essentially, that we're looking at.
Okay, so then is there anything stopping us from getting that every week, Jo, like going out for dinner every week?
Yeah, there is. Very good point. So this $300 is for irregular events. So it's the one-offs or the here and there. So it might be that we have a Christmas lunch, we might have a mid-year, lunch to celebrate the end of financial year, and occasionally we might go out for lunch for a team event or something like that. But if it's regular, then it's not considered as one single $300. They are all combined. So you can't go to the pub every Friday afternoon and spend $290 on, shouting your mates and saying, well, that was my fringe benefit for the week, and then do it over and over again. It would not be considered to be an irregular event, or paying gym fees or anything like that. They're all combined to come up with a total amount.
Okay. So then what about entertainment for clients where FBT is not applied to them?
Yeah, so FBT can't be applied to clients because they're not employees of yours. But FBT, even though FBT doesn't apply, the entertainment rules saying that entertainment is not tax deductible does apply. So yes, if you're having a Christmas party and you're inviting your clients, technically their part of it is not tax deductible and you can't claim the GST either.
Okay, cool. So that covers entertainment. What about non-entertainment, so gifts? And I guess is there different rules for employees and clients there as well?
Yeah, there is. So with employees, the gift would also be subject to the same FBT rules. So again, if it's over $300, we'd have to look at fringe benefits tax on it, and if it's under $300, it can be considered a minor benefit. But it does then, again, I guess that's the main difference really. So with a client, if you're providing them with a gift, then there's really not any particular limit to it. That is what you've paid, you've given them, and I guess it all comes down to how it's connected with you earning income as to whether it's tax deductible. But in general, a gift would be tax deductible to both a client and an individual, an employee. And you should be able to claim the GST on both of those as well.
So, okay, so then how do we, when we're paying for these things, how do we code them in our accounts so that, we're able to identify what's tax deductible, what's not tax deductible, what we can claim GST on and what we can't?
Okay, so I think the best way I sort of try to suggest to clients is to try and make sure they break up entertainment from these gifts. So if you're buying Christmas hampers for your staff or for your clients, I would consider that to be obviously that's non-entertainment, it's a gift. For your clients, you would consider that to be like advertising and promotion, and I'd probably put it into the advertising and promotion account or something similar to that, or maybe marketing. For your staff, I'd put it into the staff amenities account. And again, obviously, we just got to be careful it's under the $300 mark. Otherwise, we'd have to probably put it into another account so that we know that fringe benefits tax is applicable to it, or make some sort of highlight to that. When it comes to entertainment, I think that should also go into a separate account called entertainment. Make sure that that has a GST free code on it. So it's still a business expense. It's just that we can't claim a tax deduction on it. So, and then having good records of who attended the parties, how much everything cost, all of that is really helpful to work out if fringe benefits tax does apply.
Sure. So, Jo, I know sometimes we have training events that we have to go to that might have like an entertainment component to that particular event. is there, like, how do we split that out? Is there a different rule that's applied for that?
Yeah, so there is. So this is a really good point, because entertainment and travel are two different things. So if you're traveling or having an event that is, so let's start with the training event. So it might be an offsite training event that you have. The main purpose of that event is training, it's not entertainment. So if there is some food provided with that, it would be considered to be part of the training event, in which case you would probably code that to training. Okay, you wouldn't code that to entertainment. If you're having to travel to do that training, again, that would be travel, not entertainment. So as part of that, and it does mean that that stuff is tax deductible now and you can claim the GST on it. But also if you are traveling for work, whether it be for a training event or for whatever reason, and you are purchasing food and drink or accommodation or any of that stuff, that would be entertainment if it was purely for entertainment purposes. It's travel, and you should code it into the travel account so you can appropriately claim the tax deduction and the GST on it if it's in Australia. So, yeah.
So, Jo, say I go to, I don't know, the Gold Coast for a week, but I catch up with a client while I'm there for maybe an hour. Does that mean that would be tax deductible?
Honestly, I think you have to come up with the purpose of the trip. And if the ATO were to look at that and say, yeah, I saw that you caught up with a client for an hour, but you were there for a week, what is the purpose of the trip? Pretty obviously, the purpose of the trip is not to claim, is not to catch up with a client. It was probably incidental. So look, if you are traveling for work and you are combining it with some leisure activities, make sure that you have good records of what you are doing, and probably what that will mean is that you'd only be able to claim a portion of the travel. So, again, it all comes down to reasonableness and really good record keeping to be able to determine how much of it was work-related and how much of it was not.
Okay, so just to wrap it all up and make sure that I've got my head around this. So entertainment, we're looking at experience. Gift or non-entertainment is probably something more tangible, like an object. When we're looking at entertainment for our staff, there is that $300 minor FBT rule that can be applied as long as it's on an irregular basis, like a Christmas party.
Yeah.
Where with clients, it's kind of just entertainment. So they need to go into the entertainment account when I'm doing my bookkeeping. That will have no GST applied, unless it's over that $300 for a staff member, and then fringe benefits applies, which means it does turn to tax deductible and GST is able to be claimed.
Yeah, perfect.
For non-entertainment or for gifts, if it's for a client, it can be claimed GST tax deduction, and we're looking at putting that into the advertising, promotions, marketing sort of bookkeeping account. If it's for staff members, we're putting that to staff amenities and just making sure we're not going over that $300 minor fringe benefits. And if it does go over, we need to make sure that fringe benefits is applied. And then for training events or for those holidays where there's an incidental catch-up, it really depends on what the predominant purpose of the trip is, whether it's tax deductible or not. Is that right, Jo?
That's pretty spot on. So thank you. That was a better summary than I could have done. So hopefully that helps everyone to understand whether their Christmas party is tax deductible or not. In most cases, it's probably not going to be tax deductible, but that doesn't mean you shouldn't have a Christmas party. I mean, not everything should be about how much tax you can claim back realistically. It's all about what your staff deserve and hopefully giving them a little bit of cheer and celebration at the end of the year so they can have a bit of a break is a great idea.
Awesome.
Cool. All right, well, hopefully that's explained that. I think that's it. We've come to the end of the show. Hopefully it's taped all right this time, Lauren. And thank you for filling in for Jade.
No, that's all right. I just hope that she gets better soon. She almost made it 3 years without encountering COVID, but it got us, so.
Yeah, poor Jade. And thanks, Joel, for doing the production and quickly nicking over with a new microphone for me so that hopefully this tape works all right. And, yeah, it was great to have you filling in for the week, and I will I'm sure everyone will be back listening to us next week, and hopefully Jade will be back. But if not, I guess she'll be filling in again.
No, I'm sure she will be back. Just a reminder to everyone that we are on Facebook, Instagram, TikTok, LinkedIn. Give us a like, a follow. Make sure that you subscribe to the podcast on Spotify or Apple Podcast or wherever you're listening to us from, so that you can get updates for when we release our next episode each week.
Fantastic. Well, thank you, and we will be back in your ears next week. Bye.
Bye.